I think it's really dramatic to kind of paint it in these stark kind of like bipolar terms. I think we are post all of that. So I understand how in the Cold War, it was easy to fall into binary definitions of good and evil, 1 and 0, us versus them, team A versus team B. But in 2022, I don't think that's how things work anymore.
Hey guys, welcome back to Library of Wealth. Today we're checking out Chamath on the All In podcast, giving his take on the changes in the economy and what we can expect in the next few months. Chamath says that the United States has gone past falling into binary representations such as good and evil, and now we're in an extremely interconnected world. The dollar flows and massive collaborations are all in real time and gives every country the ability to increase their potential in the current market. With maximum energy production around the world now, there is limited space for expansion. Chamath says that the best strategy for countries with huge amounts of natural resources like America is to monetize them immediately and reinvest the profit into their people. Let's listen to Chamath as he gives his take on the future of the economy and the impact that volatility is having on stocks and financial markets worldwide. Don't forget to like and subscribe if you enjoy what we do here on this channel. Let's get right into the video.
We're in a highly interconnected, highly global world. It's very complicated. Dollar flows are real time. They're massive. Cooperation is real time. It's all over the world. It's with every country. So it allows every country actually the first chance that they've ever really had to maximize their own potential for their own citizens. And that's really what every country's goal is, right? And so in that lens, look what just happened today. Gazprom said they're going to shut off Nord Stream 1 just for, a few days, right? But as a result of that, EU nat gas has just gone absolutely nuclear and just closed at all-time highs.
14x where it was pandemic.
Right.
Price per unit for year ahead.
And so I would focus less on trying to dramatically kind of resolve these things as a few countries versus everybody else. I don't think that's what's happening.
Yeah,
now,
much more complex.
Much more complicated than that. But I think the simple explanation is people with resources in the ground of the country in which they rule have a responsibility, if they believe that there's market demand, to absorb that so that they can take the revenue that comes from it and reinvest it in their people. That is true for the United States. It's true for Saudi Arabia. It's true for every country in the world. If you look at the investment, you didn't need to go to Dave Swenson and understand portfolio allocation, although I think the guys in Saudi are smart enough to have probably done it. But if you have a lot of money coming from one kind of business, and you need to make sure that you can diversify so that you can reinvest over a long period of time. If you look at countries that had huge petrochemical related revenue flows, the Nordics, what did they do? They stood up these huge sovereign wealth funds, and those sovereign wealth funds went abroad and they bought all kinds of non-correlated assets to those petrochemicals. In the absence of what we did in the IRA, there wasn't a clear way of doing exactly what you said, which is letting people figure out what the equivalent trading price would be for burning a pound of coal versus, generating the energy needed to run something off of nuclear. There was no market clearing function for that. And the reason is because you couldn't get an equivalent amount of capacity effectively available online so that they could compete one for one. What we did through this IRA was essentially use money to create so many subsidies and then to also greenlight the way that incremental fossil fuel projects would come to market, so that now they actually going to be put on a level playing field in the broad open market so that they can compete. When that happens, I think you will make those trade-offs better yourself. And as a result, I don't think that there will be a necessary offset mechanism that'll be required.
Chamath says that the most successful countries have an enormous amount of petrochemical related revenue. This is because they created sovereign wealth funds and used those funds to buy non-correlated assets to add to the petrochemicals already in their country. They use their profits to reinvest in their citizens, which also adds to their financial security. Chamath believes the smartest thing to do when money is coming from one business is to diversify and reinvest it over a long period of time.
Because this plan will still get us to about 40% of the way there where we want it to be by 2030, which is still a pretty decent leap forward. There is no plan that gets us to where we all need to be anyways. And I think that the appetite to go from this plan to where we need to be doesn't really exist. So I think that we're just going to have to kind of grit our teeth, get through the implementation of the IRA, and realize that this is the beginning of a probably 100+ year project. Nothing's going to get solved by 2050. Maybe you'll see something done by 2100, probably not. It'll probably be a 2150, 2200 kind of an objective. And in that lens, I think like a whole bunch of business models got turned upside down. So I think carbon markets and carbon trading are not going to be the thing that we thought it was going to be. I think stuff like direct air capture, again, are going to be toy projects off to the side. I don't think that those are not going to be credible businesses like we thought they were going to be. Instead, the raw tonnage of dollars will do what America was able to do for solar and PV over 2000 to 2022, which is just crush the cost per watt into the pennies so that it can be equivalent to hydro, coal, and nuclear, and put everything on a level playing field and then allow the market to figure it out. How much do you think it would cost? I don't know, pick the most excruciatingly expensive third-party outsourcing firm you could, okay, to build an entire system to basically automatically review every single tax return and throw exceptions, and machine learn what fraud looked like or what misrepresentation. Let's say $5 billion. It'd be the most expensive. It'd be the most expensive piece of software ever written. And this is what was so kind of like, that was the only part of the bill that made less sense to me. I think like if you put really smart computers on the case or gave it to DeepMind at Google and said, can you guys build this system? So if you take a step back, we are at max energy production with all of the capacity all around the world, 100+ odd million barrels a day. Okay, global productivity absorbs that. There is very little room right now to expand that without pushing the date in which that capacity is available out until 2028 to 2030. So effectively a decade from now. So if you're in this situation and you're a country with vast natural resources, of which I'll just remind us America is one, I think the most important thing you can do for your own citizens is to monetize these petrochemicals now. Get it out of the ground in a reasonable way, sell them in the marketplace because there's demand for it, take that money and reinvest it in your people. And I think if you look at it that way, the best run countries are responding to this moment in time like any company would. How do you maximize demand and sell the product you have to the most number of customers globally? And so I think the Middle East is doing an incredible job. The US, by the way, by passing the IRA, finally, I think is on the right footing, because we can talk about this in a moment, but the path to permitting and the path to clean up. And by the way, it puts fossil fuels on a level playing field with clean energy alternatives.
Emerging alternatives, yeah.
The best thing that could have happened, okay? So I think we're all behaving in a very rational, market-focused way.
Without the framework that was done in the IRA, it would have been harder to allow people to decide the correspondent trading price for a burning pound of coal versus creating the amount of energy required to run something off of nuclear power. Chamath says there is no market clearing operation because no one could get an equal amount of capacity accessible online to allow people to compete one for one. What happened in the IRA was subsidies being produced and approving the way that fossil fuel projects would come to the market, which evens the field. Chamath believes that an offset mechanism will be required, but this new project will probably take over 100 years to see the results. What do you guys think about Chamath's opinion on the new IRA bill and how this will affect all financial markets? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.